Are you ready to turn your investment into a potential gold mine? Well, this might be the best time. You know why? The AI semiconductor industry is booming, and savvy investors are cashing in big time. But which stock should you be eyeing? From AMD's cost-effective processors to Nvidia's AI dominance, we're about to unravel 6 powerhouse companies, each with unique strengths and growth potential that could transform your $50,000 into a fortune. Without further ado, let's get right into the list. 6. Advanced Micro Devices, Inc. They aren't the top player in either the computer processor or graphics processor markets. Despite this, the company and its stock are thriving. But will this growth persist long enough to turn a $50,000 investment into a 7-figure stash at any point in your lifetime? Well, it's true. AMD's revenue is expected to increase by 13% this year, 2024, and 28% next year, with strong growth likely continuing for years. Earnings are expected to rise too. So, how's AMD pulling this off without being the biggest name in town? Firstly, technology and intellectual property are great equalizers. While AMD might not be the biggest processor manufacturer, its technology and IP allow it to produce many low-cost processors that work perfectly for their intended use. This ability to offer high-performance processors at a lower cost gives AMD a competitive edge in various markets, from gaming to data centers. It's like being the reliable family sedan in a garage of flashy sports cars. Second, the rise of artificial intelligence presents a huge opportunity. AI is the new gold rush, and AMD's got their plans ready. As its processors are well suited to meet the demands of AI applications, this opens up new revenue streams and growth opportunities for the company. With the tech world going crazy for AI, AMD's $23 billion in sales last year could be just the warm-up act. Currently, the consensus price target of $190.02 per share is over 20% higher than its current price. This optimistic outlook is supported by the fact that 35 out of 49 analysts covering AMD rate it as a strong buy. This strong endorsement from experts suggests that AMD is poised for continued success, making it an attractive option for investors. 5. Applied Materials, AMAT. Alias AMAT Company might not be the flashiest name in the AI game, but it's quietly been racking up some impressive gains. This year, 2024 alone, the stock has surged by an impressive 47%. Now, you might be wondering, what's so special about AMAT? AMAT's secret weapon is the strong and diverse portfolio of semiconductor manufacturing equipment. This includes products tailored for high-growth sectors like IoT, communications, automotive, power, and sensors. Well, basically, they're the folks behind the scenes, making the equipment that churns out those all-important semiconductor chips. It's like they're selling the shovels in the AI gold rush. But here's where it gets really interesting. AMT isn't just riding the wave, they're making waves of their own. Last year, they unveiled a game-changing machine called Zentura Sculpta. This machine can slash the number of steps needed to make chips. For chip makers, that translates into potential savings of $250 million for every 100,000 wafers they produce each month. Looking ahead, the future seems bright for AMAT. As Wall Street expects their revenue to jump by 11% in 2025, with earnings growing even faster at 15.60%. And despite this growth, AMT stock isn't priced through the roof. Its forward P/E ratio is sitting at 23.73, which is actually lower than the industry average of 27. 4. KLA Corporation, KLAC. Valued at $111.8 billion, California-based KLA Corporation is a key player in the semiconductor industry. KLA specializes in process diagnostics, control equipment, and yield management solutions essential for fabricating semiconductors, integrated circuits, or chips. Think of KLAC as the quality control superheroes of the chip world. They've got a lock on something called yield management. It's all about making sure those delicate silicone wafers come out perfectly. And let me tell you, in the chip game, perfect is the name of the game. As the AI and superconductor industries continue to grow rapidly, the wafer inspection market stands to gain from the increasing demand for new process controls, potentially driving higher revenues for KLA. KLA's financial health is impressive, ending the quarter with $4.3 billion in total cash equivalents, and marketable securities, alongside a debt of $6.7 billion. The company also benefits from a flexible and attractive bond maturities profile, supported by solid investment-grade ratings from all three major agencies. The company remains optimistic due to constructive consumer discussions regarding their upcoming investment plans, which are bolstered by recent signs of strengthening end market demand and improved customer profitability. Management believes that revenue bottomed out in the March quarter and anticipates growth to resume in the June quarter, with further improvements expected throughout the remainder of 2024. And when you look into their strategic positions in the semiconductor industry, coupled with its financial robustness and optimistic outlook, the company stands out as a compelling investment opportunity. 3. Micron Technology. Micron Technology has seen its stock soar to record highs, driven by a recovering semiconductor memory market and the explosive growth of artificial intelligence. But hold your horses before you jump in. There's more to this story than meets the eye. First off, let's talk statistics. And they're pretty eye-popping. Micron's stock has shot up 65.6% since the start of 2024. Just in the last month, it jumped nearly 15%. And if you zoom out, it's up 108% over the past year and an impressive 333% over 5 years. But what is Micron all about? Well, they're the 5th largest chipmaker globally, specializing in computer memory and storage. In 2023, 71% of its revenue came from dynamic random access memory chips, and 27% from NAND memory chips. These chips are crucial for a wide range of applications, including data centers, consumer devices, cars, and industrial equipment. Now, here's where it gets tricky. Micron's business is like a roller coaster. When times are good, they're really good. But when times are bad, they really suffer. Just last year, their sales got cut in half during a downturn. It's all about supply and demand, and those can swing wildly. The AI boom has been a big boost for Micron. All those fancy AI systems need powerful chips, and Micron's got the goods. They're one of the few companies making high bandwidth memory, which is like rocket fuel for AI. But here's the million-dollar question. Is Micron a good buy right now? Well, it's trading at about $136 a share. That might sound great if you're already invested, but some experts think it might be overvalued. One analyst puts its fair value at just $80 a share. So the takeaway is that Micron is riding high on some big tech trends, and they're in a sweet spot for the AI revolution. 2. Broadcom, or AVGO. This one has been on a roll, and it's got investors buzzing. Why? Well, they're not just dipping their toes into the AI pool, they are fully submerging. Broadcom's been around the block a few times, and they've been growing like crazy. Back in 2016, they pulled off a $37 billion deal that put them on the map. But they didn't stop there. They've been gobbling up companies left and right, including a massive $69 billion deal for VMware. In their last quarter, Broadcom reported impressive second quarter fiscal 2024 earnings of $10.96 per share, beating the Zacks consensus estimate of $10.79 and marking a 6.2% increase year over year. The AI sector proved to be the biggest revenue driver, with AI-related revenues surging 280% year over year to $3.1 billion. Currently, AI contributes to 1/5 of Broadcom's total business. Broadcom's stock has been on the tear too. It's up 42.1% this year, leaving its industry peers in the dust, and they're not slowing down. They're about to start shipping chipsets for AI clusters used by tech giants like Google and Meta. That's like having a golden ticket to the AI party. Looking ahead, Broadcom's got big plans. They're expecting $51 billion in revenue this year, with a whopping $11 billion coming from AI-related stuff. And it's not just about selling chips. They're also cashing in on custom solutions for AI compute accelerators. It's like they're selling both the shovels and the map in the AI gold rush. 1. Nvidia. Nvidia Corporation stands as a global leader in visual computing technologies and is the inventor of the graphic processing unit. Over the years, Nvidia has transitioned from focusing solely on PC graphics to pioneering artificial intelligence solutions that now power high-performance computing, gaming, and virtual reality platforms. On May 20th, 2019, Nvidia was added to the Zacks Focus list at $3.91 per share. Since then, the shares have skyrocketed by 3,071.1% to $123.99, highlighting the company's phenomenal growth trajectory. Nevertheless, the experts think there's still more room to grow. Analysts are falling over themselves to revise their earnings estimates upwards. They're expecting Nvidia's earnings to grow by a whopping 106.2% this fiscal year. Now, you might be thinking, sure, this is too good to be true. Well, Nvidia's been backing up the hype with cold, hard results. In their last quarter, revenue shot up 265% compared to the previous year. And they multiplied their profits by nearly 9 times. It's like they found the cheat code for business growth. So, what's driving all this success? 2 words: AI chips. Nvidia is the top dog in the market for cutting-edge AI data center chips. As companies rush to jump on the AI bandwagon, they're all knocking on Nvidia's door. But here's the million-dollar question: can Nvidia keep this up? Well, while their stock price has gone through the roof, up 206% in just 12 months, it's not just hot air. They're backing it up with real results. Remember, in the world of tech investing, being at the right place at the right time is everything. And right now, Nvidia is smack in the middle of the AI revolution. They're not just participating, they're leading the charge. So, if you're looking to bet on the future of AI, Nvidia is still a top pick. As we've explored these 6 AI semiconductor powerhouses, it's clear that the industry is poised for explosive growth. And the question of the day is, which of these AI semiconductor stocks will you bet on to surpass your full-time job? Let us know in the comment section below. If you found this video helpful, please give it a thumbs up, subscribe, and turn on the notification bell for more amazing videos.